Hopefully you can all hear me. So welcome to our Broadgate Search webinar tonight entitled Digitalisation, Evolution or Revolution and Survival of the Fittest in conjunction with the Institute of Risk Management. So tonight is going to run much like one of our usual Broadgate Search socials that we normally undertake on a face-to-face basis, albeit this time it'll be a little bit more virtual. So the way we normally run things for those that haven't attended one of our webinars or socials before is we normally run them in a panel format with some opportunity to stick around, do some networking and ask some questions afterwards. We do encourage you to participate as much as possible to the main session. So whilst your microphones will be muted, we do have a chat box available. So do feel free to make use of this wherever you can. I'll do my best to keep my eyes peeled on the chat box and the panelists will also. So we'll do our best to intercept the questions and answer them in the best way that we can. If you can, however, stick around for the networking session afterwards. The main session will run between 6 and 7 o'clock. We'll then run 3 smaller 10-minute networking sessions where your microphones will be switched on and you'll have an opportunity to answer questions directly to our panelists in those particular chat rooms. So what are we going to run through? We're going to run through digital transformation, the solutions and partnerships that are available to you and your organisations, and also, of course, the risk and regulatory implications of embarking on such projects. We've got some fabulous panellists to help us do that. In a moment, I'll ask them to introduce themselves to you. But firstly, I'll just give you a little bit of information on Broadgate. I think most of you know who we are and who I am. Broadgate Search are a risk and regulatory recruitment specialist and everything within that financial services sphere. As for myself, I'm Terry. I joined Broadgate 2 years ago to help open the Manchester office after a few successful years in London. We also have an office in Dublin too. So 8 of those years have been recruiting in risk and regulation. And what I would say is if we're not connected on LinkedIn, please do connect with me after the event and I'll keep everybody posted about the white paper that we're going to produce and any other questions that you've got following the session we'll be happy to answer. On a personal level, most of you will know I'm a hot air balloon pilot. It was perfectly flyable this evening, so hey ho, British weather being the way it is. But what I wanted to do is just quickly hand you over to our co-host for the evening, Sarah, who's non-executive director with the Institute of Risk Management, just to give you a bit of an update on behalf of the IRM. So Sarah.
Yeah, thank you very much, Terry. The Institute of Risk Management is delighted to be partnering with Broadgate Search again for tonight's panel. We have worked together before and it's always been a pleasant event. And my thank you as well to the Financial Services Special Interest Group at the IRM for their ideas as this event started to take shape. A very brief introduction to the IRM for those of you who may not have encountered it before. So we are the leading body for enterprise risk management. We offer qualifications, training, thought leadership, and additional kind of specialized support for folks on risk management. Given the folks that have likely joined us today have a special interest in digitalization, I would like to draw your attention to our Digitalization Risk Management Certificate, or excuse me, Digital Risk Management Certificate. It was developed in partnership with the University of Warwick, and it's ideal for anyone looking to understand risk management in an increasingly digital and disruptive world. So if you would like to know more about how digitalization is changing our risk environment, it's posing new challenges, or how your risk management tools and techniques could be adapted or applied to this new world, then please take a look at the Digital Risk Management Certificate on our site. Or, of course, you can also reach out to me on LinkedIn. I'm happy to have a chat, maybe over a virtual cuppa, and talk to you a little bit more about what we can offer you. Thanks, Terry.
Thank you very much, Sarah. And if I could just ask each of the panelists tonight just to quickly introduce themselves.
Yeah, I'll go first. I'm James Allen. I'm the Chief Risk and Technology Officer at Webhelp. So Webhelp helps some of the world's most exciting brands to transform their customer experience. Before Webhelp, I spent a good number of years in digital and transformation at Lloyds Banking Group, and about 2/3 of my career before that in the mobile telecom sector. So great to be here tonight, and nice to meet you all virtually.
Thanks Broadgate and IRM for inviting me to join the panel tonight. My name's Vernon. I'm a Chief Risk Officer at Embark, focusing on the pensions industry. Embark has 3 main areas. It focuses on platform administration, investment administration, and pension administration. I'm a lawyer by background. I left private practice just over 10 years ago to go into industry. I've been working in financial services, in private banking, in pensions, and in platforms.
Thanks, Emma. I should probably just speak on behalf of Karen. We do have one panelist that's sort of unfortunately having technical issues that she's just trying to resolve. So we're also absolutely delighted to have Karen Goodman with us this evening. So I know that a lot of you that have chosen to attend this evening do know Karen. So Karen's the Director of Compliance, Money Laundering Reporting Officer, and Data Protection Officer for Yorkshire Building Society, having worked for a number of years with PwC prior to that as well. She comes with a great sort of pedigree across the regulatory sector, and I know that she's got some great ideas and thoughts for us today in terms of what is on the agenda from YBS's point of view.
Thanks, Terry. Hi, everyone. I'm Vaughan. I'm Head of Banking at TruNarrative. We provide a unified compliance and financial crime platform that enables regulated firms to rapidly adopt an ease of configuration technology solution that automates many of the digital risk and controls across onboarding, ongoing risk, and transactional alerting. So I work across the spectrum from challenger and tier 1 firms to enable change projects, the adoption of real-time controls in our technology for financial crime and risk management. Prior to joining TruNarrative, I worked at Santander, where I worked within our future fraud team, acting as that interface between financial crime technology change and the wider business. So in summary, I'm a technology adoption advocate in the risk and compliance space, and I look forward to a number of the interesting topics that we've got to discuss this evening.
I think we have Karen on camera now. Hi, Karen.
Hi, sorry about that. Thank you for the intro. I could hear you all. I just, I couldn't see myself, and I couldn't speak. So thanks for the intro, Terry. I
was just hoping I gave you a good write-up there. It's probably not quite as effective as one you might have given yourself, I'm sure. But yeah, thanks for bearing with us there, Karen. Much appreciated. And I think that leads to Zarina.
Hi, thanks, Terry. I'm Zarina Tariq. I work in technology operational risk space. I'm currently working with TSB. So I look after some of the key critical business areas that support TSB, things like InfoSec, technology resilience, all the really important stuff to keep our platforms running and data safe. So I was TSB for 3 years almost now, and prior to that I worked with BlackRock and Morgan Stanley and other institutions where I've implemented and embedded risk control framework and complying with some of the industry recognised methodologies. So thank you so much for inviting me along and to this really interesting topic and how we move forward with it. So thank you very much, Terry.
Yeah, no problem, Zarina. So we're gonna go straight into a poll question to begin with. So just to run through how we're going to apportion this main section, we're going to punctuate the topics a little bit with, I'm hoping, time allowing, as many as half a dozen different poll questions for the audience. And I suppose this first one's probably going to give us a little bit of an idea as to just how many risk managers we've probably got in the audience. It's a bit of a glass half full, glass half empty. But I just wanted to ask people, in their opinion, and particularly I've just added there, in the current climate, because I suppose that it's pertinent to ask that, in your opinion, Does digitalisation offer more threats than opportunities? So as you can see, you've got your options there. So strongly agree is that you think there's more threats than opportunities, just to be clear on that. So I'll give everybody about 30 seconds or so. Panel, how do you think that's going to come out?
I think we're going to have an interesting split. 60-40 in favour of strongly disagree.
I'm hoping so. I'm hoping we lean more towards disagree.
Have we got some jazzy analytics, Terry, that's going to bring us the answer up?
I think so, yeah. About 30 seconds or so I think we've had, haven't we? So we could do with a countdown clock, couldn't we? So, yeah, I think everyone's had enough time. So, Lucy, maybe you can just take the poll off. So I don't know whether we actually get I'll just message Lucy privately and I'll just see whether we actually get those poll results coming through. I think it'd be good to actually have those to hand, wouldn't it? Oh, there we go, as if by magic. So what have we got there? So in the 2 disagrees, we've got, can everybody see that, by the way, the results?
Yes.
Yeah.
You've got about a 70-30 split there, haven't you?
Good. I was hoping it'd be that way.
Yeah.
So we've got some optimists in the room. Excellent. Okay, let's close that off. Great. So, so panel, what is your opinion on what digital transformation means for the industry?
I think in the current context, I've been told not to mention the C word till right towards the end, but I think it's a really interesting time for the industry. I think in the current operating context, clearly one of the lenses that business is going to place on itself is, ideally reducing operating costs, but also identifying new revenue streams. I think we certainly see there'll be a renewed, probably broad and quite deep wave of digitization. I think a lot of financial services firms have invested in digitizing the front of their businesses, but I think this next wave of transformation will move far more into middle and back office. But I think the exciting thing is there's also likely to be far more partnerships that get struck as well, particularly with the buoyant fintech and regtech sector. But I think the important thing actually is, whilst there is a lens on cost reduction, efficiency, actually what digital transformation is all about is really deepening and broadening your relationships with its customers, and actually it presents a wonderful opportunity to make business more human, and I think there's some really exciting opportunities ahead for the industry in that context.
Yeah, and I suppose that's the paradox in itself as well, in that this can make things more human. Has anyone got any other thoughts on that?
Yeah, Terry, hi, it's Eddie here. I think many of our audience members will be sat there thinking about what truly is digital change and what does it mean to them. We always have lots of different concepts, but it's about putting into practice processes that enable us to automate certain things. So whether that be the front end customer onboarding experience or those middle or back office processes that typically have very human interactions, those I think in the current climate, the processes that we've seen fall down. And I think as risk managers, we need to embrace that sphere of technology. It can be very daunting to try and understand what all of these different technology terminologies mean. But framing that in digital adoption is now the norm. So we all know that our customers expect that frictionless and digital experience, but moving now compliance to be that business enabler is absolutely critical. So ensuring that we have that right level of technical competency to translate what can be very technical requirements into the practicalities of how a business runs and operates, whilst ensuring that we have a really strong and effective control environment. And I think that's the real opportunity that we have within the risk and compliance space. But there, I think, needs to be a very strong education environment that enables everyone to grow into to build those new skills in understanding technology.
Harry, I'd add to that and give a slightly different perspective, which is I think digital transformation is as much about people transformation as it is systems and technology, and thinking about how we, particularly in the risk and compliance space, work differently, not necessarily just through automation or through new systems, but work more agilely. Does that mean we have to reflect on the way in which we undertake and how we undertake compliance monitoring, for instance? You know, a 3-month-long thematic review may not actually be effective when you look at the discrete processes and the pace and what's happening in the business. To Eddie's point there, I would also reflect on what does that mean for actual behaviours and the mindsets that we have within our teams.
I think, Karen, you made a really good point. I think I'll add something to that as well. And I think it's really important for firms to move at a pace where firms might be focusing on, it'll be interesting how it unfolds, where their focusing is are they focusing on the front end? Are they looking after the back end office and how we operate as a community of workforce as well? Or is it just the customer facing environments that we're changing and we're digitalizing just that end? And then looking at from risk and control perspective and risk professionals, and what tools are then made available by the firms to risk professionals to move at that such fast pace where technology is getting delivered and it's getting more, the ways of working is agile, and how do we move? Are we totally equipped and armed with moving at that such fast pace? So I think that time will tell.
And how do you feel that the choice is typically made to kind of embark on these quite, you know, obviously quite pronounced projects? And, you know, what are the main sort of commercial drivers then that, you know, the organisations typically bearing in mind here?
Terry, from my perspective, I think it's less a choice and one of survival. I think through COVID and the changes in customer behaviours, it's become a hygiene factor that customers can access their banking and financial services through digital means. So I think it's less about, as I said, less about the choice, more about actually keeping pace with what our customers want and need.
Yeah, I mean, I would echo that. I mean, I think historically, in even recent history, you know, it was seen as a luxury or a nice to have, and continually, you know, project budgets were being eaten up by regulatory projects, you know, mandated projects that had to be put through, and digitalisation was something that for a lot of organisations, particularly some of the larger ones, was kept getting put onto the back burner. But I think what, you know, the C word, COVID has probably done is shone a light over the situation and has acted as an accelerant. And so what was seen as a nice to have is approaching a hygiene factor, as Karen said. You know, if you can't seamlessly answer calls, access your emails and so on from home this past 4 months, then you haven't been able to run your business. So from an operational resilience point of view as well as, you know, a range of other factors. The only other thing I would add is that from a sort of societal perspective is that, you know, I sit in the pension space and we've got a significant advice gap in the UK. We know we do not have sufficient numbers of advisors to service the needs of the United Kingdom, and we've got an ageing population. And at the point in time when people want to take their pension benefits, that is an advice point, and we simply do not have sufficient numbers of advisors. So in theory, at least, digitalisation should enable us to carry out some of those routine processes more efficiently and effectively, and get the advisors to target those specific events where bespoke, not necessarily face-to-face, but bespoke personalised advice is needed.
Yeah, it's quite interesting because we've spoken to a number of our clients, of course, in our network, who said that processes that typically have been laid out over a 2-3 year roadmap are now being undertaken in 2 to 3 months. And don't get me wrong, there's been some really good success stories. I think a lot of people have pleasantly surprised themselves from a resilience point of view in just how they've managed to adapt to that kind of new normal, really. You make quite an interesting point there, Emma, about doing, and of course this kind of stems on from Karen's point about simply it being a matter of survival. It might be interesting to understand, because I know we were going to ask a poll question, and it might be quite good on that point to bring it up at this stage, actually, just in terms of whether people view do they have the time in their organization to undertake the as you say, that kind of that luxury amount of time, and have the amount of capacity to do the research, the digital change initiatives that they actually want to do, rather than the stuff that's just been borne on by the dreaded C word or anything like that, really. So it'd be quite interesting just to understand. Lucy, if you've got poll 6, it might be good just to run that now quickly and understand the audience's thoughts. There we go. So just to run back through that. So do you feel that in your organisation you are offered the time to undertake the research and to undertake the digital change initiatives, as opposed to sort of simply getting essential tasks done? So if you strongly agree, you have the capacity to be able to do things in the time frame that you would want them to do it, or strongly disagree, you just fly by the seat of your pants, is the strongly disagree answer. Be interesting to see how you feel that, or how you feel that plays out in your organisation. So I'll give that a few seconds. Panel, how do we think that'll come out?
I think they're going to be a little bit more pessimistic on this one. I think it's going to be 80% disagree, 20% agree, maybe less.
Yeah, I think it very much depends on the nature of your role, but perhaps more importantly, the size of the entity that you work within. So I think typically, if I think to my Santander days, we worked in a specific team whose role was to do the future change and explore new technologies. I think if you work in a smaller regulated entity, you're very much going to be consumed by the here and now. You can kind of see the benefits of what digitalisation can bring, but trying to get to that point with dealing with BAU is probably going to be very difficult. And I've worked at both small bank and big bank, so I understand both ends of the spectrum.
Yeah, and I suppose the adoption of digital can differ quite, well, without stating the obvious, it can differ quite wildly from newer startups to organisations that are lumbered by, I suppose, legacy tech, really.
Yeah, I'd absolutely agree with that, Terry. I think at TruNarrative we work with both tier 1 banks but also startup banks as well. That conversation piece is always far easier. With a startup, it's greenfield. There is no technology stack. They have the luxury of time in that pre-planning to go, what does utopia look like? They have that benefit of being able to adopt the most up-to-date digital solutions, be that the new Fandango core banking platform, or the new best and automated AI or document and biometric solutions. And they're able to build out that solution from the ground up, but more importantly, through new principles of design, they're able to build a bank that scales as volume grows. When you work in a very traditional bank and people talk about digitization, often governance can get in the way of driving forward a digital strategy, and it takes far longer to implement change in a traditional bank or regulated entity than it does in a startup. And often it's not necessarily about a fantastic to-be solution. So most people could go to a whiteboard and design how they want the future to look in a traditional bank. But getting to that point, putting the challenges with governance and process aside, is actually understanding and unpicking the architecture that exists in that bank today. That's the huge challenge. And typically, we see a lot of our customers in that space spending a significant amount of budget in understanding, you know, I call it the bag of spanners that's there today, that's been stitched together or thrown in over time, 10, 15 years. Trying to unpick that technology stack is so difficult unless you make that mark in the sand and go, okay, we build everything greenfield in a new technology stack over here. It then becomes a very, very expensive project to what might initially seem as not necessarily digital transformation, but perhaps a process improvement with a digital aspect. The costs of how a traditional bank or regulated entity would bring that in as a project is elongated in time and elongated in expenditure as well.
Yeah, I can only echo that from experience. You know, the target operating model is easy. It's the existing operating model, trying to unpick the spaghetti of third-party services, you know, purpose-built, bespoke bits of software, spreadsheets, and so on, to try and unpick that just to get the current operating model. And then at the same time, seamlessly try and run a transformation project whilst maintaining service levels to your existing client base. That's the challenge that a startup really doesn't have. It doesn't have those two challenges. So I think of the traditional sort of banking space, or that, you know, that older established institution. It's a bit like trying to move a cruise ship. It doesn't happen quickly, and it needs a lot of room and time and cost.
Yeah, it's a really interesting one. When we have those conversations with well-established regulated entities, it can be very daunting for them. And there's often a process that they go through that says, how are we going to do this? And there are various options. You have the build internally at great cost of ownership, a very elongated project lifecycle, or you have that partner approach. And you can also have a hybrid. That generally then tends to drive how a project is commissioned and how it's run. And there are huge benefits to adopting things like software as a service, over and above the very traditional way of deploying technology on premise and into your data center, a la tier one bank. Those projects are absolutely like the Ark Royal, in that, you know, it will take 10 years to build. You might own it at the end and it's yours, but by the time you put it into the ocean, someone else has built a steamship that's faster than yours. So the challenge is about, how does an organization deploy technology that enables them to get that competitive advantage? And do they have internally both the technical and domain resilience and expertise to be able to build that architecture? That's always the challenge. And I think that's where, you know, certainly we and other software providers can help, in that we provide that technology risk framework that does many of the technical bits, but we give them the area then to build and configure in a kind of no-code environment how they actually want to deploy their risk and control strategy.
I agree, and having come from a big bank, I recognise the challenges. I think for me, in and amongst all of this, the secret sauce in digital transformation is around operating model, ways of working, and talent, both your ability to attract talent and deploy talent. You know, I think all accept that risk and compliance is essential, and it's an enabler to this next wave of digital transformation. But a core challenge, I think, for firms is going to be, how do you attract digital talent into risk management and vice versa? And we did an experiment at Lloyd's when I was in charge of digital risk, and we formed a new team. And they were made up of agile coaches, coders, technology integrators, architects, and then we developed the risk management skills into them. And it worked really, really well. So then we flipped it, and actually, as part of people's development in digital, they had to come and spend some time in risk management. So I think that the ability to make best use of skill and capability and bring it together in new ways of working is really, really important. As you can tell by my title, we've taken it a step further at Webhelp. So we've actually got technology and risk teams together in one function. And that means they're constantly optimizing for pace and safety. We've got technologists that are highly skilled in risk management, and risk professionals who are really fluent in tech and digital. So I think that's a key component of this story as well.
So on that point then, James, so So what sort of benefits from a top level point of view can a good external partner for digitalisation bring you?
I think there's a number. It takes years to build out digital and transformation capabilities, particularly within large organisations. I think the benefit of partnership is becoming increasingly important because no one company has the solution to all of the digital challenges and demands that our customers have. Sure. So I think whether it's a big partner, whether it's a small startup fintech of 3 people, I think they provide insight, they provide a context, they provide a perspective that's hard to replicate internally. And I think one of the really interesting things that we're starting to see in big banks is those senior executives actually now going on to reverse mentoring programs where they've got a 24-year-old that's fresh out of university but is in some skunkworks fintech, and actually they're mentoring the top girls and boys on what's happening in their industry and how they should be listening to their customers. So I think partnership brings some phenomenal opportunities, but is essential.
Yeah, I can certainly believe that on the reverse mentoring point. Yeah, for sure. Yeah, the world is moving so quickly; it just makes complete sense, really. Yeah. What sort of obligations does sort of outsourcing or having a third party relationship kind of bring to you typically? What do you need to bear in mind?
Do I say that? Well, there's a number of regulatory requirements around outsourcing provision and use of third parties. I think the regulators set out some quite reasonable, some quite mature frameworks. I think though what you've got to do in partnerships is to operate as a partnership. So to move beyond the traditional supplier and buyer type relationships and form a partnership. So one of the first things that we do when we partner with companies, very first thing we agree a partnership charter of how both companies are going to operate together and the outcomes that we're trying to achieve. I think there's benefits in using third parties, so particularly in the context of technology and data, often third parties, because they've been able to start from a base of automation, can bring to the fore far more advanced and far more automated control environments that helps the partner to reduce risk. I think the thing the regulator has been nervous about is adoption of cloud. I think they're over that. I think they get actually it provides more opportunities to be secure, to be more resilient. They were quite concerned about concentration risk and things like that, hot topic for quite a long time. But actually, I'm hearing now as a regulator again, go, push, don't break your business in the process. But you guys have got to be taking advantage of these opportunities.
I think I'd agree with Terry on a number of those points. I think it's quite an interesting point. The adoption of cloud, we as an industry got over that slight discussion point because how many new neobanks deploy on premise versus on cloud? I don't think I can name one. Because there are ultimate benefits, and the reality is that with the right control measures in place, it's very, very secure. I think when we talked about the benefits of that partner model, I love Terry's idea around the charter. I think the key benefits that we see ultimately is that cost of ownership. So building everything internally at huge cost and time, the cost of ownership is greatly reduced through that partnership model. Particularly when you talk about cloud, because those types of software providers have these environments there ready to go. Many of those configurations exist out the box. So it's simply a case of integrating into a well-versed and trodden model. That speed of deployment that derived from that then gives a regulated firm that competitive advantage quicker than if they were to build themselves. And Terry mentioned it, that specialist support. Nobody outsources. Terry,
I think you mean James, don't you, Eddie?
Sorry, James. Don't be calling Terry all night. Terry, James, nice to meet you.
I'll take the credit.
And I think ultimately, look, nobody outsources their risk. it's a partnership and they need to effectively manage those risks. But the benefits far outweigh the negatives when we're talking about compliance now. Risk management historically was never seen as a competitive advantage. It absolutely is now. If we think about those processes that historically slow things down in a bank when it comes to a customer, everyone goes, credit risk, fraud, checks, AML. All of those things can be automated through partnerships now.
That partnership model enables organisations to focus actually on what they are good at. And, you know, it's maybe controversial, but banks are generally good at banking and maybe not so good at building their own bespoke system. So, you know, if everybody focuses on what they're good at and partners with the right technology provider, you know, and plugs in, as you say, at the back end to provide that straight through processing, that seamless arrangement, then over time, digitalisation should provide a more competitive landscape, because that will effectively bring the barriers to entry for new entrants down, because they can effectively buy in that service at a lower cost than it would have cost them to build. So it should enable a more competitive landscape, which should benefit the consumer.
Yeah, I'd agree. And there's that form of middle ground there. So banks not being software development houses, but then equally what we have seen is software development houses become banks. If you look at the culture, right, of some of these neobanks, and you go, are they a bank or are they just someone that's had an idea and a technology skill set and they've then become a bank? And I'm sure, you know, there's a map on the, you know, one of those heat spots on the internet somewhere, which we can see, you know, that type of thing. But at the very end of that, those software development houses that become banks, some have got into regulatory hot water because they haven't had the deep domain level in financial crime and compliance to be able to effectively manage their risk. So there's kind of that balance that's going to sit between partner, you know, software development house and bank. There's no one model is right, but it kind of feels that in the middle in that partnership is probably the right way to go.
Yeah, I mean,
I'm sorry, Emma. I'm just going to move on to the next poll actually, which should be quite interesting. So poll 2, Lucy, if you don't mind. So, do you feel that in your opinion, in your respective organisations, working with external partners does make it easier for your organisation to keep on top of your risks when it comes to digitisation? Whilst we're letting people make their choices, Serena, it might just be worth asking you quickly, if you don't mind. I mean, what does good supplier oversight of a digital supply chain look like?
Yeah, so Oversight provided they've got really good onboarding, pre-onboarding assessment in place and robust due diligence, and that's all been carried out. I think the oversight, it starts from being aware of your full digital supply chain ecosystem. And we'd be surprised how many companies don't really have their arms around all of those suppliers that touch your data systems, and anything that goes over your data and systems, that should be considered as part of the digital supply chain. And some of the categories could look like cloud services, managed IT services, software, web, logistics, and so on. And gaining a really good awareness of those can really, you know, set you off a good standing with having an understanding of where the data flows, perhaps even reduce redundant services, and maybe in some cases save you some money. But to have all of that in place, you need a really good, strong technology-based risk management strategy to gain and maintain that sort of awareness. And also, some of the panelists have mentioned that, you know, sitting closely with the risk team, and to me, from experience, the risk and the procurement and technology delivery teams should really work closely together, and perhaps even operate as a team, as one, because we just cannot continue to work in silos, and that's where the gaps are. And I really hope that that's the kind of model that banks will start to move forward, and deploying some of our really really good up-to-date software should also be considered. And of course, it's costly, and we should consider the risk, the return on investment, and so on. And some of the really kind of the automated processes and strengthen your control environment. We need to move away from the paper-based and manual processes in some of the cases, and try to do some of the other automated and use other kind of the automation and robotics, artificial intelligence in some cases, and use that as an oversight tool. I think those would really put us on a competitive edge with our industry, in our industry. And that's again at a cost, and how quickly we can move towards that if we haven't already, and that remains to be seen.
Yeah, I'd agree with that. Probably it's probably one of the hottest topics actually that our clients talk to us about, and I think particularly in banking, where they've been traditionally very big industrial grade operations. So you put the control into your people, and you put the control into your process. The less people you have, the more digitization you have, then the less effective your controls become. So we get a lot of requests to support the problem statement of how do I digitize my control environment itself, and there's a big bit in the middle there, because as particularly boards of these banks and big businesses have placed a lot of reliance on the control environment. So there's a big fear of failure to overcome in transforming it from the old to the new, but the results can be really compelling. I mean, we had a client that was really worried about customer vulnerability, hot topic across the industries, but they felt that their control environment was lagging and ineffective. So we built them an advanced analytics solution that automated the whole thing, customer journey monitoring, highlighting specific areas for improvement. They were really concerned about adopting it because they'd committed a certain control framework to the regulator. We said, let's take it to the regulator, and they loved it. So I think the regulator's starting to get on that journey as well, but there's a big fear of failure to overcome in financial services to enable that digitization.
You make a really, really interesting point there, James, just alluding to, I suppose, the kind of implications that lead to potential financial exclusion, for example, for the customer. So we're going to run poll 3 quickly. And I want to really kind of understand how if people feel that in the current world, digitization does lead to financial exclusion for the consumer.
I don't know how we're going to go on this one. This will be hard to call.
I think it does, without wanting to preempt this, because if you're a neobank, or you're a Monzo, or you're a Starling or a Revolut, you have your particular segment that you chase down. When you're an established bank, you have to have that omni-channel experience for your customers. If you focus solely on digital, you do lead to financial exclusion, because as some customers get older who haven't adopted digital, or might not have access to devices or network coverage, they may over time become excluded if a more established entity with a broader customer base focuses solely on digital. That's part of the reason as well why it's more difficult for an established entity to take on digital change projects, because they've got so many different customer segments that they serve.
Yeah, definitely. The angle I took from this is I think there's, just have a look at what that poll says, but I think there's also a fantastic opportunity for digitalization to be inclusive. So if you think about vulnerable customers who have physical impediment or use particular types of their own technology, actually, if we are able to offer services through alternative channels which aren't less face-to-face or dependent on face-to-face, that also opens up greater access to others. So I think there's a balance between inclusion and also, as you say, the exclusion that may arise through kind of having the technology, smartphone, particularly with stronger customer authentication, having different means to verify yourself, So there's that angle as well. And Eddie, as you say, as a kind of incumbent organisation, we have a responsibility to both treat our existing customers fairly and ensure that we service them to their needs, whilst also identifying and recognising what the future customer looks like. And they may not be the same. And it's how to continue to live and breathe our ethos and stay true to our brand, to be committed and loyalty to those existing customers, whilst also recognising the future customer base that we need to offer opportunities and perhaps different services in different ways to access.
It's a great point, Karen.
Yeah, picking up on some of the things that Karen said, I'd echo that. So, I mean, this is not a new topic. The regulator's been looking at this since, at least 2014. They talked about, particularly for vulnerable consumers, that it can lead to digital exclusion and workarounds. But to Karen's point, that the empowerment that digitalisation can provide for the physically disabled who are potentially, say, housebound or unable to go and fill forms out and send them off through the mail, those who are hard of hearing, who can't have easily phone calls, who can use text and email and an online system, the empowerment that digitalisation provides is recognised not only by the regulator but also by some of the organisations that support various different vulnerable sections of society. And it is not only about access to technology, so whether that's broadband or facilities, but it's also that technological or digital awareness. And the FCA has pulled out in specifically the ability to not have digital skills as being something that makes people potentially vulnerable. And I'd echo all the comments about the larger organisations and the breadth of their customer base. And the regulator in fact talks about what firms must do is to understand their customer base, what their vulnerabilities are, and what that means for their information needs and for their user experience needs and how they interact with the services that you're offering.
Yeah, I'd agree. I'd fully support that. It is a real challenge for firms. I think digitalisation, to your point, offers opportunities. I think it also gives the opportunity to develop far more intimacy with your customers. The good thing with more things being digitised is actually you've got the data. You can follow the data. You can use analytics to pinpoint even transient vulnerability. And whether that's in your digital journeys or in your contact centre using things like speech to text, the good thing is these technologies can be used to really, really improve the customer experience and help to detect those sort of issues. But I think I agree it's a topic that should be centric to every bank strategy.
So in summary, do we feel that consumers want more or less digital interfaces, or is it really just truly a blend across the board?
I think it follows on from the points we've just been talking about. I think, if as a firm you're looking at a consumer base and your target market is the under 30s and it's app based, then that is clearly what you're targeting and what your consumer base needs. It's the more traditional breadth of offering. Firms and institutions that have the challenge, and what they must do, and what I think as the industry knows, is that we must have a user-friendly and inclusive designed user experience. And for those who simply don't have online access, that those individuals must be supported. And I was reading just last week, and this might be familiar to some of my panelists, but how on an app you can use AI to actually identify when an individual is hovering and struggling to make a decision, or actually putting in information to suggest they're confused, and then actually support can be offered, that can be identified and offered. And one of the challenges is that firms have been offering support but that the user hasn't been made aware or not been made aware at the right time. So the ability to use that kind of AI to identify when someone is struggling and provide that support is sort of a blended way forward, I would say.
I'd also add that it's not just about what customers want, because I think this is where the innovation and the part that some of those new entrant banks have to play as well, and also thinking about the FCA's regulatory sandbox and the innovation that they are encouraging and actively fostering, is that age-old kind of, and not to be cringe, but kind of the Henry Ford quote. I mean, if you ask customers what they want, they would say, you know, faster horses in that example, but it may be something very different. And I think it's, you know, very much the gift is ours to work out actually not just what might make things a bit easier, a bit quicker, but actually revolutionize and think 2 steps ahead.
Yeah, I mean, I've been reading again about some of the Dementia Society and the Deaf Society being pulled into some of the banks to get some of their members to assist with the user experience testing at an early stage to make sure that all the relevant sort of safeguards are built in. Something that ensures that, you know, that the digital processes can remain, but with the support where needed, in addition to ensuring that we can provide services where necessary for those who simply, those channels are not appropriate because they're underbanked, you know, to use a term, or, you know, they're simply don't have the requisite skill set.
Karen, you're money laundering reporting officer for YBS. Do organisations, in your opinion, sort of fully understand the role that the financial crime has to play in sort of non-face-to-face circumstances and transactions?
It's that is an ongoing and evolving answer to that question, Terry, because you know, criminals will always find ways to exploit innocent people and organisations for their own gains. And through this current period, we've seen, you know, the use of cash, for instance, has declined. So what was a kind of common typology for money laundering around use of cash, that's shifted. So again, it's kind of continually evolving the controls, and what would have been you know, in the face-to-face, you know, our colleagues being that first front line of defence, that shifts. And it's again that will never cease, that challenge and that aim to keep one step ahead, to think of where are those ways that criminals could exploit any process, and to put in place ways and controls to identify it and mitigate it.
Aaron, I have a completely unscripted question off the back of that. So with this, I do apologise if this is going to put you on the spot. When you talked about the change in MO of criminals, what role do you think technology has to assist in identifying that change in behaviour?
I think there is definitely a role of technology in taking, for instance, transaction monitoring is intelligently looking for patterns and for themes, whereas, you know, manual, you know, looking at writing work events and writing rules, technology can aid with the continual learning. So to manage both the efficiency of that control, and also operationally, you're deploying your resource to the events or the triggers that are actually giving you the things that warrant further attention. So it's about efficiency and effectiveness.
Perfect.
Yeah, I mean, I'd echo that. You know, Embark, our platform, which is straight through processing, we obviously have all the usual onboarding and online verification tools, but it's using those tools that use AI to enable you to learn about behaviours and around specific points, whether it's withdrawals or password changes or address changes, rather than using those historic, just arbitrary thresholds which send up a flag. It's using AI to actually be able to learn patterns and usage. That's been really useful for us as an organisation.
Brilliant. I'm gonna move on to the next poll, guys. Poll 5, which asks our audience here: do you think that, in your opinion, the risk function within your organisation is engaged in a sufficient manner across the end-to-end digitalisation journey? What do you think, guys?
I don't think anyone's going to cough to not being engaged. I'd probably say I've seen varying degrees of engagement in the different banks I've worked at. Some departments, I think, certainly when I was at Santander, fraud were absolutely engaged in every part and process of the bank. And that was great. Other departments, less so. And again, I think it comes down to how well does an organisation, in terms of change, engage its different stakeholders.
One of the challenges I've seen as well is that the risk function has tended to be staffed by permanent established members of staff, and often the digitalisation projects that I've seen in some of the bigger institutions have been staffed primarily by contractors and third parties who've come in, sat on a separate floor and engaged primarily with the existing incumbent tech staff. And so there's been a sort of a geographical and a cultural divide that's been difficult to get over.
So it's interesting. We've had a bit of an even keel there. We've had a decent data. We've had a data set of about 30 to 35 per poll, and yeah, that one. Let's have a look. So I mean, the disagrees have it.
Terry, I would also, to the question, I think there's also the aspect of, does it need to be the standalone kind of risk teams, or should it actually, those kind of, whether it be conduct, financial crime, or other risk considerations, actually be the responsibility of the people who are the sponsors of that program? And it actually shouldn't be, there shouldn't need to be a compliance person in the room or a risk person in the room to be able to identify and to input. It should be embedded in the sponsorship.
Yeah, 100%. Yeah, and again, that's almost a cultural thing, isn't it?
I think that's a model at work. You've got to set out those accountabilities at your sponsor level. I think one of the challenges, particularly where firms are fully adopting agile, they're forming co-located teams in labs and things like that. If you've got a really relatively small lab team, to the point of the different disciplines in risk and compliance, you can quite quickly end up having a conduct person and a financial crime person and a risk person, and in the end, your sort of oversight team becomes bigger than the lab team itself. So I think there's a sort of good principle of however senior or not they are, having a sort of chief risk officer in the lab, but that's got their friends outside and they can do a sort of phone a friend. But again, I think it comes back to really embracing the operating model and ways of working changes. And that can only be a good thing, I think, for these functions. Good.
And you mentioned the dreaded C word at the top of the conversation here, COVID-19, James. Whilst there is much, sort of discussion on COVID-19 and its impact around businesses, what impact do you think COVID-19 will have on the digitalisation of organisations?
So I think it will be fundamental. So I think there's really at the moment there's two imperatives of our time: lives and livelihoods. And I think while some areas of financial services, such as insurance, have been relatively unscathed by the pandemic, there's been a much greater impact on banking and wholesale markets. So we've seen retrenchment by households, as well as corporates, external cost pressures. So I think the early hopes of a V-shaped recovery are very unlikely to happen. I think we'd forecast more of a U-shape probably into Q3 2023. And in a context where, particularly for banks, interest rates are going to stay lower for longer, possibly go negatives, that's going to drive a massive increase in the rate, the breadth and the depth of digitization, I think, as we see it. And I think it will go much further into these functions. And so that, you know, I've often seen there's a picture sort of going around on LinkedIn of who in your business drove the digital transformation strategy. Was it your CEO? Was it your CEO? Or was it COVID-19? And I think it's probably the last one.
Yeah, and what role will risk management play in that context?
You know, for me, it's got to be a key enabler. It's an absolute key enabler. You can't not have risk and compliance as being an enabler. It's critical to successive, you know, digital transformation. If you have the best digital products in the world, but if it's not compliant, you've not actively managed your risk, it's not going to land. So it's got to be a key enabler.
Yeah, I would echo that, Terry, as well. It's and we also need to think about whether we are ready with that, the technological capabilities, we're ready with those, and convinced that these actually work for risk as well, and regulatory and supervisory acceptance, and prove that higher digitalisation means better standardisation, therefore better control environment, and move at the same pace as the technology and the delivery side teams are, and become more agile, and culture and behavioural shifts and tone from the top is really pertinent in implementation and embedding that culture, and having the right a skill set and talent pool to allow us to transition into that new culture, and risk. I see that as a kind of a strategic advisor at the centre of the bank, and that's how we should be operating.
Guys, I'm just a little bit conscious of time here. We're slightly overrunning, but I just wondered before I wrap up, guys, has anyone else on the panel got any thoughts around that? No? Right. We're 5 minutes over, so we've not done too bad. But unfortunately, we have run out of time in our main session this evening. So thanks once again to all of our panelists. Thank you for your time this evening. Thank you for all your contributions, and thanks to the audience for the question. I can see from the rolling chat box to this side, I think some people have been really enjoying getting engaged in this conversation and asking some questions. I think we did have one question actually, which I did just want to put to the panel quickly, which was asked by Lee. Does the move to digitalisation impact on how you actually resourcing? And I suppose this might be a bit of a question for us really as a knock-on to that, but how does it impact on how you resourcing your risk and compliance functions? Where are you seeking the relevant skills and expertise, and has that evolved?
Good question for Karen, I would say, or Emma.
I would say I would revert back to the point I made earlier in terms it is less about it's more about mindsets and behaviours and alignment with what the organisation is trying to achieve, and therefore digitalisation being one of them. And it's about, for me, introducing agility and flexibility. So having the skill sets and capabilities within teams that allows them to, again, keep pace and to operate in an agile fashion, which means we aren't restricted or limited by doing things the way we've always done them, for instance. And I think that mindset has to be reflected in risk and compliance functions as much as it is at the sharp end of digitalisation and technology.
Thanks, Karen.
Agreed. And I said before, we take a dual approach. Sometimes actually we'll hire digital talent and develop the risk thinking into them. But actually, alternatively, we'll develop the digital aspects into risk professionals. But I think the point Karen made there is absolutely spot on. Mindset and method is really the key thing.
Thanks, James. Just to let everybody know that we will, I think I might have mentioned it at the top of the webinar there, but we will be producing a white paper following today's session, just to report back on what was discussed. And I will also publish the poll outcomes in that white paper as well. I don't think that any of the actual outcomes were absolutely convincing one way or another. We got a real kind of even keel across a lot of those, which was really good to see, actually. For the purposes of debate, I should say. Might not necessarily be what the individual would have wanted of their situation and stuff, but it was really interesting to see what sort of outcomes we got from that. By attending tonight, you will automatically receive a copy of this paper. I would encourage you to please share the white paper with your workforce, with your networks as well, in the audience to other people. I think I can see Margaret in the chat there has just said it's a bit of a shame she couldn't get other members of her leadership team to come. So Margaret, please do share the white paper with them, and we will be making a recording available as well. So in terms of what happens from here, Lucy's been posting a little bit of a link in the chat box over to the that way to the chat box over there, which will take us through to the networking session. Now, what Lucy will do once you're in there is she will allocate you to different chat rooms over the course of sort of 10-minute periods, so we can just have a little bit more of a discussion around some of the topics we've discussed. I do feel like we've only just begun to kind of scratch the surface in some of those areas, so it'd be good if you can stick around if you can to help us sort of continue that discussion in those sessions. Thanks again to the IRM for co-hosting the event, and thanks to Sarah. Please keep your eyes peeled for future events that Broadgate are running. I think the next one is on the 19th of August. Full details will be published shortly. We're just sort of confirming the finer details around then. But if you are jumping off, thanks again for your time tonight. If you can stick around, then we look forward to catching up with you again in a few moments. So thank you.